You feel free to cut in, jump in whenever you want. I'm going to give the overview of it, and then we'll just kind of dissect this. But Matthew 26, also found in Luke 19, there's this story that Jesus tells called the parable of the talents. And I want you to pick out, there's one part in here that I want you to pick out that you may have not heard before, and it's this. When this master is going to go away for a while, he puts his 3 servants in charge of his estate. He gives the first one 10 talents, the next one 2 talents, and the next one 1. Imagine like getting 10 bars of gold, 2 bars of gold, or 1 bar of gold. Well, he gives them in that order to his servants. He packs up and he heads out. He goes away for a long time. He comes back and he says, okay, guys, what'd you do with the money? What'd you do with it? The first one steps forward and says, Master, I took the 10, I invested it, I doubled it, I turned it into 20. And the master says, you good and faithful servant, I'm going to put you in charge of a heck of a lot more. And then the next one steps up and says, Master, I took the 2 and I also doubled it. I turned it into 4. Here it is. And the master said, you are a good and faithful servant. I'm going to put you in charge of more. And the last one steps up and says, Master, I took the 1 and I was so worried because I know that you're a tough man. I was so worried about losing it and so fearful that I dug it under a rock and I laid it there, but I dug it back up and I'm going to return it to you right now. What did the master say to him, Chris?
Ah, you evil, wicked man, evil, wicked servant.
Evil, wicked servant. And I want everyone just to answer this question to yourself. You can put it in the comments if you want, but why did he bury it? What caused him to do that? Why didn't he do like the other 2 and go out and invest it and try to double it? What caused it? And ask yourself this, have you ever buried your talents? Instead of risking loss, have you ever buried them, put them under a rock?
So let me give you a different perspective on that one. So in my opinion, in my experience, that the servant buried that because he was fear of retaliation or fear of something bad happened. So as we know, Jesus talking parables, not everything was as it appeared. So what if he was literally talking about talents, right? So this man or us, we're blessed with certain abilities and we keep them hidden and buried because we're afraid of what other people may think. Maybe we're blessed with the ability to sing. Maybe we're blessed with a servant's heart where we can go out and affect other people's lives, but we don't do that kind of thing because we don't have the faith in our spirituality and in our God and our Savior. So we don't go do those things out of fear of not being successful. And we don't utilize those talents. So he could be talking about people affecting, could be people prophesizing, could be people ministering, could be all of these things. It's not just about money, even though, you know, this is always related to money, and I believe that this should be applied to money, but it's going to be applied on a grander scale, definitely on a grander scale, because I know that if I didn't utilize the gifts that God gave me, personality, you know, the ability to survive through other things, and I didn't share that with other people, that I feel like that I would be definitely condemned over it. Absolutely. So it's more about the money, definitely talking about the gifts of the world, but I think it's deeper than that.
Yeah, I do too. And so I think that the lesson that I want my children to learn from it is don't bury talents. Number one, get out there. You got to take some risks. You got to have some faith. You got to step forward. You got to exercise what you got. Okay, cool. Chris, would you mind saying a quick blessing?
Absolutely. Heavenly Father, first and foremost, I'd like to acknowledge and give thanks for who you are in my life. When you lead my life, things just seem to go much better. Thank you for the numerous blessings. Thank you for this ability to share some of the knowledge that you've blessed me with. Please guide Nathan and myself as we share some knowledge and wisdom and some guidance. I ask this in your name. Amen.
Amen. Thank you, sir. All right, we are going to get into the headlines that are affecting us as investors. So if you are investing capital right now, you're thinking about investing capital, these are the things that you want to pay attention to this week. So number one, the Pelosi Act stands for Preventing Elected Leaders from Owning Securities and Investments. This is real. This is not some cutesy name.
This is a dig. I'm sorry.
It's real. They're trying to pass this right now. It just got drafted by Senator Hawley, from Republican from Missouri, and he's trying to prevent politicians from playing day trading, from playing the stock market.
Yeah.
What's your feedback on this, Chris?
Well, I think this is awesome, right? Here's the reality, because these guys have been doing insider trading for forever. Martha Stewart got sent to prison for it, but we all know if you follow the trades that these people do, you see that when there's a sudden market shift in a stock, whoa, magically they were out the day before. Or if there was a sudden increase in a stock that's connected some way, shape, or form, either to the government or to their political ties and friends. Oh my gosh, they just bought 1 million shares of that stock. They have got to be the best stock trader in the world. Meanwhile, they're off running our government. The reality is they've got inside information, and I'm sick of it.
Wait a second. You mean Nancy Pelosi, who's been a government team member for the last 40 years, making anywhere between 100 and 200K per year? You mean that it's not possible in her 200K salary to have an $86 million net worth?
You think? How is that possible? Either this woman knows, has got a crystal ball that works, or something else is going on. I can't point fingers because I don't have any hard facts. But I just think it's ironic that this is called a Pelosi bill. When I first saw that, I was like, there's no way she's doing. Oh, and then I saw the acronym. Okay, great. This is awesome. But you and I know what's really going to happen, right? They're now going to set up shell corporations and trade through those shell corporations and keep making the same amount of money. It's pathetic. It really is bad.
Yeah, they'll find some workarounds.
Absolutely.
At least this will make a little more transparency. Maybe it'll make a little more honest folks entering the political life.
Did you say honest? You were talking about politicians? Okay. Hey. Uh-huh.
Okay, well, watch for that to make headlines. Last night, the only other thing politically that I want to hit is Canada had their elections yesterday. In Canada, 33 weeks ago, the Conservative Party was up by about 25%. They had a huge margin. All the projections said they were going to win. And just over the last 3 weeks, that margin flipped.
Yep.
And it flipped big time yesterday, and the Liberal Party ended up taking the majority of the seats, which means they should get the prime minister seat as well.
Yep.
Well, that's happening in politics. Now, I want to talk about a piece of political news that is going to affect some investors. This isn't our cup of tea, but a lot of folks are using subsidized housing as their rental income. They rely on this. They're buying them. They target them. And this also known as Section 8, HAP, HAP. There's a lot of different names for it, but something that everybody should know right now is that if you're getting into deals that are relying on government funding, a lot of that government funding is getting cut. And I can't say all of it because it's not true, but really the theme going on right now is that federal funds going out to some of these families, there's a lot of pullback. They're trying to cut some of the middlemen out, and then they're cutting back on funds for future budgets as well. So, Chris, what's your take on this?
I got lots of takes on this. So let me first of all say, if you relied on the government to support your well-being, shame on you, right? So now that these programs are being pulled back, it's going to be targeting these landlords, and you're going to see all these properties, go out at a discount because they're not going to cash flow anymore, because these are people that have been taught to or conditioned to rely on the government to pay their rent. And a lot of these people don't have jobs. So now that the landlords change, I don't know how the heck they're going to survive. But for these people that target these type of properties for a profit, I don't feel bad for you. I just don't feel bad for you. You're taking advantage of situations. I just don't feel bad for you. But I'm glad that we don't get involved in this kind of stuff.
Yeah, we don't target these properties. We've inherited some team members that live in buildings when we take over, and we process as they are, but we don't go and target buildings like this. And this is a case in point of why. And I want to actually let you listen to Scott himself and what he said. This is the vision. This is what's probably going to happen over the next 3-4 years with this administration. Listen to what Scott says.
HUD, not to grow the amount of people on subsidies, but instead to get as many people as we can off of subsidies and look at the people holistically, from a job creation, from a family togetherness, from a skill and workforce training, so that American people live lives that are on a trajectory, and to achieve the American dream of being homeowners.
So right there, he said it. The goal is not to expand the program. The goal is this is more like a trampoline. They get on, they bounce up, and then they get off. And that's the way that he's envisioning all of these funds like this. So you can expect less budgets for subsidized housing in the future. Expect more programs that are short term. I think that's how they were originally intended.
They were originally intended that way, and this is a great idea. Terrible plan. The system is pretty much set up for these people to fail. Historically, a single mom, let's say, has a kid. She's out there earning X amount of dollars an hour. It's enough for her to get her housing taken care of and to get daycare taken care of. She earns 50 cents more an hour. Now she loses $400 a week in benefits. How does she make that transition? There's got to be a better plan put in place rather than just pulling this money back, because these are lower income people. And what happens is they're in a state that's not so great to begin with. You start taking away their food, their housing, you're going to increase the crime rates and devalue these properties as a result of crime statistics rising, property crimes, even violent crimes. So great idea, poor plan to just pull the plug. There's got to be a transition.
And Chris, I want to echo something. You hit the nail on the head when you said these properties will have more crime. So like if you have, let's just say, subsidized housing and you pull the voucher from someone and now you tell them to leave, they got nowhere to go.
Yeah.
They're coming back.
What are they doing?
We've seen it before.
Yeah, in our properties. Yeah.
They come back and they're going to break in this time, and
Yeah.
then they're going to become a vagrant, and they're going to have to be evicted again. And so like that's the reality of the situation. So I do wish there was a little bit more of a
Bridge, some kind of
down.
transition, something.
Yeah, but it is what it is. We're reporting the news to you so you can make decisions for the future. Just watch out for, don't rely on government subsidies forever for housing. It's just, that's not a reality. It wouldn't be a safe bet. All right, Chris, we need to talk about something that's buzzing in a lot of people's ears right now, and that's this whole, what's going to happen with this tariff situation, and are we heading into a recession? This is kind of taking the storm of the internet right now, and a lot of people are thinking that we are going to flash back to 2008. I'd like to get, you're someone you've lived the goods, the bads, you've been through a lot of economies, and I know you don't have a crystal ball, but
Yeah.
I want to get your take because you've always done well in uncertainty. Like,
Right.
what's going on with this?
If you were to ask my humble opinion, this is hype, right? To some extent. Sure, there's some changes and some growing pains, and there's a lot of this start and stop with the tariffs. All of that is great. But I believe this is being done for political gain, right? Trying to hype up people against the incumbent president and just make things crazy insane so that there's no confidence in leadership, no confidence in government, so that they can come in and take the next election. The reality is I don't think it's anywhere near as bad as it's being perceived, right? We see unemployment coming down. We see the market starting to, overall, it hopefully will come back and bounce back. But, I think that this is just a scare tactic to instill fear and remove confidence from the current regime.
You want proof on why that's true, Chris?
Sure.
So first term, when the Trump administration was in, they enacted tariffs
Yep.
against China and a few other places. And when Biden came in, Biden didn't remove them because they were bringing billions of dollars.
Oh, wait a minute. Those terrible tariffs? The other
Yes.
side didn't remove them?
Yes, they kept
Huh.
they kept them
Why is that?
because they're bringing in so much money, so much. And so, yes, there's going to be some shifting of prices. It's inevitable. I mean, we just got a phone call this morning. We're sourcing these HVAC units for one of our buildings that are specialty. They slide up into the ceiling tiles, so you don't have to have a condenser on the wall. Well, our usual supplier, they're out of stock. They sold out, and they don't know when they're going to get more
Right.
because of this. So there's going to be some temporary pain, but ultimately, I think it's all being blown out of political proportion
Right.
to make some drama. Someone wants more drama. Meanwhile, while some of the market goes a little bit crazy, especially with the stock market because of the ups and downs, here's what's happening in multifamily. This just hit the record books, state of Georgia, South Georgia. This is in the southern half, but a buyer stepped in and just bought this building right here, hitting a record high. So we're not just talking about like an average sale here. We're talking about, this is for per square foot. This is a new record in South Georgia. Chris, why are people paying a premium for multifamily right now? Why would they jump in and want that?
Listen, this is already too late. Why do I say that? So he's paying top price for that. But why is he paying top price? Tax cuts and job acts, period. This property is going to bring so much tax benefits to the owners. It's insane because what they're predicting and what they're gambling on and what they're probably absolutely right about is the old Tax Cut and Job Act is going to be brought back. We're going to get that 100% bonus depreciation on our accelerated depreciation again. So they're going to get huge tax benefits on that. What was it? $18.2 million was that the sale
18,
price?
yep.
So they'll probably get 12, $11 million with the tax benefits in that first year on their tax return to offset all of that income. So that's what's going on. We've been talking about this for weeks, but now we're actually seeing these things start to transact. Ever since this passed the Senate and the House, we're starting to see these things transact, and prices are going to keep escalating in the multifamily space, especially in the high dollar amounts. Because remember, who can afford the high dollar amounts? Investors with deep pockets, or people who've got medium pockets, put them all together and do a syndication deal. So you're going to be seeing this on the $15 million and plus. They're going to go through the roof, primarily in the B and A space.
So everything that Chris said, that you might hear in the news as the big beautiful bill, some people are calling it. So essentially it's a repeat of the tax bill that was passed during the last Trump administration. What most people don't realize is that when you buy multifamily real estate, there are some hidden tax benefits from it within that bill. Bonus depreciation, accelerated depreciation. I won't try to confuse you with big words, but literally what it means for guys like Chris and I, and for people that invest in deals like the ones that we invest into, we can put money into an apartment building instead of paying taxes, instead of paying the IRS. We put money into an apartment building. Now we get rental income coming in, and we get to knock down our tax bill. So there's a certain way to do it. There's some specifics to it, all that kind of stuff. But that's why we're seeing people step up and grab multifamily. They're grabbing it knowing that this is going to come through. The likelihood of it getting passed, I'm not a betting man myself, but I'm 100% confident it's going to get to 99.9 unless something tragic happens.
Can I throw things out there? Just get a little bit more complicated, just a little bit. So they bought that $18 million building, and they probably have a $13 million loan. So that means they raised $5 million in capital, right? So they invested $5 million, and in that first year, they're going to get that $11 or $12 million tax benefit. So they're literally trading $5 million cash to get a $12 million benefit because they got the bank financing 70% of that, but they still get the taxes and the accelerated bonus depreciation on the whole acquisition price, and they expect it to roll back to January 1st.
I want to put that into simple terms too. So
I'm sorry. Yeah.
No,
You're very excited.
You unpack something that's important. Okay. If you get nothing else from today's broadcast, if you learn nothing else this week, take this home with you. What Chris just said can make you a lot of money. So the reason that these people bought this $18 million building is because they probably have a $13 million loan. They probably put around $5 million cash down.
Yep.
But yet they're getting 10 million plus in tax benefits year number one. That's what we suspect anyways. Now, let me put it in simpler terms. We have a client named Matt who came to us a few years ago, and he bought a building and put $130,000 as a down payment. In year number one of that investment, he got $106,000 as a tax benefit. He would have had to pay the IRS over 100 grand in taxes, but instead he put that money into a small multifamily and he got almost all of it back in year number one. So it's huge. You're going to see more of this. Just expect multifamily to be making headlines a lot for the rest of the year because it's a safe asset class in the midst of this recession too.
And remember, same supply because there's not a lot of new starts after these past several years, and more demand. Prices go up.
Yeah. Chris, I want to talk for a moment about where the new demand is, and I want to talk about the rise of the tertiary markets. This is one of the top trends of 2025 right now. As investors, and they basically sourced a whole bunch of sophisticated investors in this space. And the number one trend for 2025 is the rise of secondary and tertiary markets. So we're not talking about New York. We're not talking about Chicago. We're talking about cities that are secondary, okay? Boise, Idaho, Huntsville, Alabama, Green Bay, Wisconsin. Why? Why is this happening?
Why is it happening? Because, again, there's not a lot of new building going on, especially in these primary cities. So people are being pushed out, and they're having to make that commute back and forth to work. And let's remember now, a lot of businesses are getting away from the work from home model. So that means they're requiring their employees to come in. You can't afford the prices, or you don't want to pay the prices in that tier one market. So you step out to a tier two market, maybe where there's some public transportation, train, or some other means to get into the city, like Green Bay, Wisconsin, and into Chicago, and all over that area. So as a result of that, you get a better life for less money, and you commute back and forth to work. And let's be honest, now you can get Wi-Fi. Well, that Wi-Fi. You can get Wi-Fi anywhere, so you can work on the train back and forth to work and stay connected the whole time. It's a beautiful, beautiful thing.
So affordability,
Yep.
they can just take the train into the big city and live in the second city. So for us as investors, it's cheaper for us to buy the property in the secondary market, not the primary, instead of the secondary or even the tertiary. So it's driving a lot of really good ROI for us for what we're doing with investors.
You know, I hate using that word secondary. Can't we use like urban?
Yeah, let's rename it. Or tertiary. I don't know why they came up with that either. Okay, so speaking of this, we had Secretary Turner. He came up to this secondary market or urban market. We went to Titletown last week, Green Bay, Wisconsin, and he's going around and touting all the good work that they've done from the last time that his team was in office, and he's talking about how Green Bay is going to be so good for this. Why was Scott in Green Bay other than touting some of the projects that he's doing? And
Come on, can I call a spade a spade?
Oh.
So was it just coincidental that last week was the NFL draft? And it has happened to have taken place where? In Green Bay, Wisconsin. And we all know that if you go on a vacation and you spend 1 or 2 days doing some work, right? Now it's a tax write-off. So that whole trip was a tax write-off, and you got to spend the weekend dealing with the draft and, tap some people on the back, kiss some babies, shake some hands. So yeah, he was in Green Bay to talk about the opportunity zones. Wink, wink, nod, nod. But hey, he was there. And I firmly believe that he heard that we acquired an asset in Green Bay, Wisconsin. He wanted to check us out.
That's gotta be it.
It's gotta be it.
I hope you guys caught the wink. Did you see that? By the way, this is what I deal with all day long.
All day.
This is like the giant grandpa joke machine here. Okay.
Mhm.
So Scott was up in Green Bay, and as Chris said, he was here checking out the asset that we're about to acquire. Check this puppy out. Okay. This property here, Class A building on the river. It's on the Fox River on the mouth of Lake Michigan. It's in the fastest growing county in the state of Wisconsin, which is Brown County. This is where Green Bay sits. So you've got this city that's housing, basically bringing in more population. But in addition to that, it's the high income earning population.
Yep.
It's really important. So like as the city grows, look at this. It literally hit number 2 in the country, only behind one city in Florida, for having high income earners move to the city. Nowhere else in the country is it going as fast, except for one other city beat it. Why? What's the heck is going on that made that? Well, number one, Green Bay ranked number 1 best place to live just a couple years ago. Last year it was in the top 12. The year before it was number 1 in the country. So what you're seeing with this place is that there's jobs, there's expansion like crazy going on, 550 million Georgia Pacific, bunch of other companies expanding, and then people want to move into this. And when we're looking for apartment buildings to buy, like this particular asset, we're looking for job is increasing, and then population growth. When we have those 2 factors, it makes it really, really easy for us to buy a deal and then increase the value tremendously so we can give our investors a good upside. If you're looking for a potential deal to invest in, this part's important. This one, the IRR on it, internal rate of return, it's unreal. We are high double digits. I'm talking like 18 to 22%, depending on what dollar amount you invest in a deal like this. And we've got spots that are open right now. We've filled about half of it already, but we've got spots that are open right now, and we are officially open on this deal. So if you're looking for a place to grow your capital, this could be a good one. It's only open to accredited investors. And Chris, what do you want to say about this property?
We're back to our lesson at the opening. Double your talents. The numbers pencil out so that you could literally two times your money in 5 years, which is our business plan on this thing. So beautiful property, grade A, bunch of surgeons live here. And check this out. It's 7 miles or 9 minutes from what you call it?
9 minutes from Lambeau.
9 minutes from Lambeau Field, and full of surgeon and professional people. This is a grand slam home run, and we've been negotiating on this one for a long time.
Yeah, Boris is asking you, what do we project tax savings to be? And I know that we have to wait for the bill to pass and all that stuff, but what are you thinking?
So without the tax bill passing, right? Without it passing at this point, we're looking 18-20%. That means you get $20,000 for every $100,000 you put in. But we're also relatively confident that The new tax bill is going to come in, and it's going to be made retroactive to January 1. And we're betting on that. I don't want to say betting. We're pretty much counting on that. And so that'll get you up to that 35 to 40% without an issue. The more you invest, the higher that percentage goes up. And if you have any questions about that, please book a call with an advisor. If they need to get me on the phone to talk about your individual situation, be glad to do it.
Check this out, guys. It's hard to see in the video, but if you guys have ever seen the big
Oh, yep, there it is.
Green Bay sign,
That one right up there.
you got it right here. I mean, it's literally right there in front of our building. They call this City Deck, and that's what the asset's named after. It's 2015 built, new construction. We don't have to deal with a bunch of old electrical, a bunch of old plumbing. Like literally, we have underground heated parking for this place. You've got rooftop balconies for a lot of the units that are lofted upstairs in this. 77 residential units, 3 commercial units, 100% occupied. We scored a song on this property. Like, no joke, we're buying it for less than the seller bought it for.
Yep.
And there's some negotiation behind that and all that kind of stuff, but we're stepping into a situation where like this is.
Can we be honest about this?
Yeah,
Right?
please.
So here's what's going on. So, our company motto is believe in more. This is a situation where everybody wins. This is a person that tried to sell this property to somebody else, and they drug him out and didn't execute. Whatever happened, it was just a whole scandalous situation. This person has to sell this property because mom is terminally ill. He's partners with mom. Mom wants to sell the property before she passes so she can divvy out the profits to all of her children, and the son that's involved with it doesn't have to deal with that. So he knows we're going to execute on this, came to us. We made a great deal for us, made a great deal for our investors. And at the same time, he is being blessed by God through the situation, allowing us to make this close and to kind of come full circle for his mom so that she has peace before she passes. That's the whole story on this.
Chris, sometimes we get the question, what's in it for you? Why do we do this? Yes, we're doing good. We make a positive ripple in the world with our corporate profits, but what's in this for us? Is it cool if we talk about a couple of those things?
Absolutely, absolutely.
So first and foremost, when we buy a property like this, we do get paid a fee.
Yep.
There's 2 spots where we really get paid. There's actually a couple. I want to go through all of them right now. When we buy it, we get paid a fee kind of like a broker does. It's called an acquisition fee. We get paid a little bit there. That barely covers our costs to acquire a property like this. The next spot that we get paid is that we're involved with the property management, with the construction, with everything, making sure that distributions are coming for people literally in quarter number 1 after we've owned it for the first full quarter. We get paid a fee for doing that. We also get paid when we exit on this deal. Okay, what that means is that the majority of our profit comes when we take this thing all the way to the finish line. So finish line for us is 3 to 6 years, somewhere in that horizon period. We're going to make sure that we buy this thing, we increase rents up to market rent because it's rented under market rent right now. And then once we get there, we're going to put it out for sale. We're going to look for a strategic buyer to come in and buy it from us. And then that's when we generate the windfall profit. In the time of ownership in the middle, we have preferred returns that we need to get to you as the investor. So preferred returns start at 6%. They go all the way up to 8%. If you're doing a large dollar amount, there's even options where you can get more than that. So for us, our incentives are sincerely aligned. We get a little bit of money to cover our costs to acquire the building, but after that, we get paid when you get paid. When we bring this thing to the finish line, that's our windfall profit.
Yeah, you write the check, and that's when our work begins because we don't make it until we cross the finish line. So we've got to get this across the finish line as big of a winner as possible because that's where we make our money. The more money we make you, the more money we make for us. The more money we make for us, the more we can do God's work in this world.
Cool. So if you're interested in a deal, then reach out to our team. You can, if you're following us on social media, just put the word call in the comments, CALL, call. And our team will send you a private message. We'll send you a link where we can book a call with one another. If you're following us here on this platform, then you can literally just click the link that got dropped in the chat section by Doug and jump on a call with us. But that's it for this week's Opportunity Zone.
In and out.
Cool.
Lots of positive news, lots of positive things taking place. Listen, back to the lesson that we opened this session with today. Please, whatever God has blessed you with, whether it's financial, spiritual, or just personality trait, use that to affect the world in a positive place. And if you're having a bad day today, I'm sorry for that. But do your best to just give somebody a free smile that looks like they're struggling today, because that smile may be the only one they see today. And you may touch their lives in a way that you don't understand. God bless everybody. Thank you.
Thanks, guys. See you next week. Actually, we're gonna see some of them this week
Oh, yeah,
We
in
got
just a few minutes.
in office.
Yeah, we got in the
people
office
coming.
this week. See you guys, see you
See
special
some of
guys
you
later.
soon.